As I mentioned, RH is getting slammed. We're going to talk about that a little bit later on this morning, Jenny. There's other stuff getting hit, tech's getting hit, consumers getting hit. What are the big bulls on the street saying, Dan Ives and those guys, about tech right now? Is it run for the hills?
Okay, I would say no. It's not run for the hills, and I actually think, to counter what Kevin said and really pay attention to the headlines, which I agree with, but I think actually I would argue really pay attention to the story. It's like everyone just wants right now to read the headline, read into the risk, understand what's actually happening, how these tariffs actually impact you. And I think also same could be said for the stock market right now. Like, read beyond just like a downgrade, understand why they're downgrading shares. Dan Ives did say he'd characterize this newest slate of tariffs as worse than the worst case scenario, which was actually, I mean, as negative
worse
as
than the worst case scenario. Yeah, I mean, I agree.
It's a pretty negative tone. I actually agree too.
Yeah, yesterday the whole point of looking for a relief rally was that hopefully it wouldn't have been worse than 25% across the board, because I thought that's what they said was basically the worst. So this is definitely, Dan Ives nailed it. This is worse than the worst.
It really is worse than the worst, unfortunately. And he said there's many details to be worked out. There's still many specifics that he will believe will be unveiled in the next 24 hours. But the jaw dropper was the China reciprocal tariff of 34%, Taiwan at 32%, the EU at 20%. He also did note that these tech stocks, of course, your largest in the world, Apple, Nvidia, will be under major pressure on this announcement because of demand destruction, supply chains, and China and the Taiwan piece with the tariffs. They also added they'll be speaking with these companies and investors globally over the next coming days to get a better sense of what this means for these companies. I think that with Nvidia, there is going to be a major concern because of its ties to China. Its exports were already a concern of this year. But also, to their credit, I also feel like from understanding their supply chain and how they've been able to avoid mass shortages, they've also been able to keep production times, completely on schedule. They have a mastery of their supply chain now. So I know that this is unprecedented times, but give me a financial impact. But before that, it's just, I think, a lot of hype and fear. And you have to understand that Nvidia has been able to ride this wave before.
And it's been under a fair amount of duress already, to Kevin's point about these companies that have been under some pressure already. I think that is a very valid point that makes sense, because Nvidia was stuck for a long time, broke down. Apple held on for a lot longer, so maybe Apple still has a little bit more to give. I mean, keep in mind, it's been like 9 months since Nvidia has been at the same level, ultimately going sideways. So it'll be interesting to see the dynamic of selling in the Mag 7 today. If it's all just, at the same time, and then does Tesla get punished extra because of associations with the White House, or do they get punished less because we already did the auto tariff stuff? I mean, it's fascinating to kind of see that dynamic with Apple down the most. Keep in mind, that's also when Apple got the worst day in March, was kind of near the bottom as well, because Apple kind of is that place, the last resort where people want to go to sell.
But keep in mind also, Apple's momentum for the better part of the last, 6 months has been on the super cycle of the iPhone 16 and the mass rebound of their business model with AI. All of that has disappointed. So I actually think Apple's maybe the most due for, and I'm not saying that, I'm not rooting for the correction, the mass correction in tech to continue, because I do believe if you want a upside move, you have to believe in the participation of these stocks. But when it comes to Apple, I have a very hard time with the fundamentals right now.
You've argued that. I've been in the same camp as you, that it was ridiculous to trade this as a safety trade in tech, when it was more expensive than ever it has been. Whereas Nvidia's valuations came down. So Apple's kind of a weird place to hide out from the beginning. So it getting hit 8%. Is pretty intense, because people like to try and trade that as a hidey hole hideout. So I mean,
and it's not, because frankly, I mean, as far as its AI build, it's been disappointing. They're delaying Siri, which is just egregious to me. They're also having, major international ties, sure, but still, most of their revenue is the iPhone, which has shown no signs of being promising and able to prop up then the rest of all of this noise.
Sure, I get that. How about the consumer stuff here? Athleisure brands. Nike, Lulu, and we're going to talk the RH stuff, like I mentioned, but a lot of the consumer, it seems like, is just getting dumped.
They are. So, okay, B of A, so we're seeing now mixed analysts on Nike today, especially Lululemon. I'm shocked by Lululemon. We already saw a pretty substantial down day last week following earnings. But when it comes to Nike, this is a heavily international company, yes, and I think that's why we're seeing such massive moves in so many of these specific retailers today. Actually, one of the biggest moves of this morning. When it comes to Lululemon, though, I have a hard time making the same argument, though, because they have also, first of all, been massively repriced to the downside, but also they have 90% of their goods. I mean, I guess maybe the concern is that with their products coming from so many different countries, at this point, it doesn't really matter where you're getting it from. It's all going to be expensive. But I mean, we're even Deckers this morning also down pretty substantially, as this seems to have caught the entire athletic retail market pretty off guard this morning.
Yeah. All right. So analysts kind of thrown in the towel after a few, investors thrown in the towel. I mean, again, kind of like our conversation with Apple being specific things going on too. Nike's had specific issues as well, but to see Decker down, that one just continues to unwind on to those that had been really successful in the consumer space. Market's just taking no prisoners. Just disgusting.
It really is.
Wow. All right. Thanks, Jenny. Appreciate the context there.